This video is about Fibonacci retracements and how to use them to find tradable bottoms and tops in the markets. Um, and it's pretty straightforward. There's no like guessing or predicting going on. You just kind of let the market tell you what's going on, and it's a way to get into the market and define your risk. So Fibonacci retracements is a popular indicator. You just So Fibonacci retracements is based off the Fibonacci sequence, and the numbers, the 23%, 38%, 61%, and 76% are derived from the Fibonacci sequence and how they divide into one another. So the structure of this is you find a low or a high that you kind of want to anchor, I guess, to. So for example, since we're going to be looking for a tradable bottom, we're going to be marking the high, and that's where it starts. So 33.9750 on the S&P, and on the way down, while we're looking for a low, again, not trying to predict, you're just kind of drawing and seeing how the Fibonacci fits as we go lower. And the trade setup is essentially where you get, you eventually bottom out and you make your way above this first Fibonacci, the 23%, and the retest of the Fibonacci, the 23%, is the entry method. So again, no predicting. You're looking for the low. You're just drawing as you go. And I'll show you some examples. So here, actually, I'll go back to this low here. But drawing here, we want a trade above the 23%, and it's got to be more than just this. It's got to be more than just, poking your head above. You have to see some separation of price from this 23% price above the 23%. So for example here, this is a great signal that we're seeing continuation in the market, continuation to the downside, which is exactly what we got. So I'm going to change this. I'm going to come back down. So here, I'll remember this Friday. This is a Friday, in the afternoon. This is the type of separation you want, but it didn't last long, and it obviously didn't pan out, which was fine given the times. Here, I don't think anyone was buying on a Friday going into the weekend. So again, drawing off these lows, we can't even get to the 23% here. Drawing off the lows, we can't get to the 23%. Drawing off the lows. Finally, we get to the 23%, and then see how this is different now, where you're actually seeing price break the 23%, and what we're looking to do is buy those retests of those levels. Let's see. Trying to buy those retests because we're looking for continuation. So that's the entry method. You find the low, and then price beats the 23%, gives you some space, and you look to buy the retest. And then as far as the stop loss goes, there's two choices. You can either, put it somewhere below the 23%. You just have to account for the volatility that, is a part of the market. So the safe play is to put it under the low, but you have to be willing to take, that kind of risk. So you have to, structure your size accordingly. So that's the setup. From the high, find the low, price beats the 23%, and on the retest is where you buy. So I'm going to pull up a couple examples, nice examples. Amazon's for sure the nicest because we've seen new highs off the trade. So again, you have the high, and then the low was put in in down at the low, you see the sellers that kind of built a level, and it was conveniently the 23%, and we broke the 23%, and we retested on the other side, and that retest is the entry, and the stop loss should go below the low, and that ends up being a really nice setup. I'll show another one. Let's see. There's actually been a few. So this is one that is a little longer term. I have to zoom out a little bit, but we see our high in Disney, our low. Zoom in to most recent action, and again we have our low. If I zoom in a little more, we see price respected the 23% initially. Sellers were apparent. We retested, and now this time it's become support, and then it gives you opportunities to get in, and this is the kind of the volatility that goes along with it. You got to, although it's not that big of a deal here, you have to withstand some of it. It's obviously not perfect, but you see, like for example here, Disney is respecting its 38% retracement, where the sellers have been sitting there. So let's see, I want to show one more, and then we'll go into Johnson & Johnson and ZTS. Alright, Apple. Again, you find the high, mark the high, you're looking for the low, you finally get it, price turns, and this one, it basically gaps up and just holds the 23%, and you see eventually you get an entry against the 23%, which was an absolute, that was a really good one. So let's see, I'll use one more, Visa. Let's see. Alright, Visa. Again, similar setup. There we go. High, find its low. Kind of similar to Apple, where you got this gap up, you hold, and then eventually you get your retest of the 23%, and that's been a good trade where you've seen minimal downside. You're basically buying the lows of this pullback, and you've seen pretty much nothing but upside. Johnson & Johnson, J&J. So this one, it's a little more tricky because the entry, you weren't really given one, which is, you're not always going to get one. So again, from the high, find the low, and then we start to clear, not very much, but you start to clear the 23%, and you get an entry, and then really that was the only test was right here on this Wednesday. Other than that, we haven't tested it. Let's see, there we go. We got a test at the 38%, and you can see it's been kind of stair-stepping itself higher, but the entry wasn't as, you had to be quick and you had to be ready to get an entry on that one. And ZTS, let's see, this is similar, where you never really, so you put your low in, we gapped higher, move up towards the 23, sellers were here, and then we beat the sellers, and you get one little test of the 23%, and since then it's really worked its way higher. The 38% actually worked as a similar setup, so normally you'd have a stop say below the lows, if you were entering against the 23, if you were entering against the 38%, I would have it say halfway between the lows and the 23%. So if your entry was here or here, I'd have my stop below the 23%, just in case it did trade back down towards that 23%. So yeah, that's kind of the trade setup. Again, you find the high, then you wait for the low. You don't try to force it, and then you place your entry against the 23%. Looking at going back to the S&P, because I was going to do that. And I'm going to go back to the lows made in, let's see, when was this? The end of February. So I'm going to draw it off the lows. So here's the move. This is the high. Down to the lows. You can see a similar setup where price was respecting it from the seller standpoint. Then eventually we beat it, we flipped it, didn't get a test here, and then eventually got a test here, which ended up being short term a decent trade to the upside. It just didn't work out. So depending on how you manage this, you either made a little bit of money, maybe broke even, or lost some money. So, but the point was, it was a good entry. You didn't take much heat on the entry, and there was a chance to make money, which is kind of the important thing here. So again, it's not much predicting. You just kind of wait and watch the market, wait for it to show you some type of bottoming. Wait for it to beat the 23%, get through it, and then retest it on the other side. So, yeah, that's the Fibonacci retracement with the entry against the 23%.